I am beginning the webinar, Sathish.
Sure.
Good evening, everyone. This is Rucha, and I handle membership engagement and industry initiatives at NASSCOM Pune. I, along with my team, welcome you all for today's webinar on Future of Money. This webinar is about the creative innovation that's underway in money and payments that would lay the foundational rails for the future digital monetary system. The focus will be on the alternative payment rails that are challenging the traditional monetary and payment systems, such as digital currencies, card network innovation, and creative cross-border payment systems. Before we get started with the webinar, I'd like to go over a few important points that may help you to know how to participate in today's event. As an attendee, you will be on mute throughout the course of the event, and if you have any questions, you can type them in the Q&A tab at the panel. We will try to cover as many questions as we possible. And in the interest of time, if we do not cover any questions, you can email your questions to pune@nasscom.in and we will answer those over email. Please join me in welcoming Sathish Padmanathan from Tietoevry Banking. Sathish is the head of product engineering, payments, and messaging at Tietoevry Banking. He's a senior technology leader with extensive experience managing transformation projects for large banking customers worldwide across North America and Europe. He's a payments enthusiast who passionately solves business challenges through principles of lean and agile. Sathish holds a master's degree in technology from BITS Pilani. He has previously worked at IBM and Capgemini and has been an entrepreneur with 2 startups. Over to you, Sathish.
Thank you so much, Rucha. Good morning and good afternoon, everyone, depending on where you're calling from. Enough said about me. Benefit of time, I would directly go into the topic. I also want to thank NASSCOM for having me here and deliver this topic. The topic is very close to my heart. I've been working in payment all through my career, and I'm here to share my experience and also talk about what I know. I'm certainly not an expert, and this is definitely not a masterclass, but this would be more of what I've learned in the past and probably sharing my experience. So I want to quickly walk through on the structure of this webinar. I'll start to talk about the evolution of money, how we've been paying in the past and versus how we pay today. How is money in general created and distributed, in the banking ecosystem? Immediately after that, we'll also talk about payment because everything today in life is based on payments, right? And the different type of payments. We'll go into the nuances. We'll talk about the challenges we face in the payment industry. And we'll also talk about the innovation that is underway in the payment industry. Towards the end, we'll also cover a bit about the central bank digital currency and also the India story with us launching both our retail and wholesale CBDCs the last month and this month. And we'll also have enough time for question and answers. Yeah. So before I start this topic, I thought we will launch a poll just to understand, what kind of audience we have and where are you calling from. That would really help me, bring up examples and make analogies that would kind of connect to your also context as well. So Rucha, if you can launch the first poll. Okay, so we have most of the participants from India. We also have from the rest of Asia and the Pacific, and also there are some participants from the UK and Europe. Good, thank you. Then, if probably we go into how paying has changed over years, right? So the first and very ancient way of pay was barter, right? As the picture suggests there, it was more like exchanging goods. The example here is, okay, yeah, there are 2 pigs and you get a cow, or probably 10 goats and you get a cow, maybe 5 cows and you get a horse. So this is how we started doing business or paying, right? And if you understand the trust and the valuation in this type of payment, trust is questionable and the valuation is also questionable, right? Because these are goods, could be perishable. The value may not be the same in every part of the country or even every part of the state. So I vividly remember back in the days when I was a kid, I was exchanging stamps for some cricket cards, right? And we all would have done that. So barter was one of the ancient known way of how payments were made and how trade was enabled by exchanging goods. And then there was also public money, in the analog format. It was kind of gold and ornaments, which, okay, you can trust if it is a metal, a precious metal like a gold, because the valuation is global, and the valuation doesn't really go down steeply or go up steeply, right? But the trust is also that, okay, you really have to understand if that is the genuine form of a metal, and valuation of that would also require some expertise. And then the next segment, probably hundreds of years ago, there was also bank money. Probably the last known coin was even printed during the Sangam era, probably the age of Cholas and the Mauryas. So okay, there is a bit of trust there, high trust, because that is issued by an authority, and the valuation is also very stable, right? Because there's an authority which kind of issues it, and the claim is on an authority. At the same time, we also have today in the digital form, digital currencies and e-money that stays in a bank, which has the trust and also stability, right? And if we kind of go a bit forward, it's official money, which is nothing but transactions we carry through central banks and through commercial banks, where both the trust and valuation is kind of stable, unless a country's economy is kind of going through a very bad time, right? And it's the same with central bank digital currencies. These are real digital currencies, whereas the one above, where the digital currencies or stable coins, which were kind of issued by commercial banks or a big financial institution. So this is how paying has changed over the years. Starting from the barter way of paying and enabling trade to how we pay today, very real time through digital coins and so on. Yeah. Then let's spend a bit of time on characteristics of money, right? So money has to be fungible, which means that you should be able to differentiate it from one unit to another unit, right? And it should be durable. It doesn't deteriorate. Durability is also something like, okay, when you have a metal, it will always have its value. And if there is a currency note that is guaranteed by a central bank, it will always have a value based on, again, how the country is performing and so on. It should be portable in the sense that you should be able to move it very easily from one place to another place, use it for trade without any restriction, and also generally recognized and accepted widely, right? And the most important part of money is that it should be stable in value. Today, most economies are facing this challenge of their current account deficit compared to some of the benchmark currencies of the world, like the US dollars, Japanese yen, and the euro. And stability is a question, but it is not a problem, at least for stable economies. The value of the currency continues to be stable. Of course, there are up and down based on how the current account deficit is, but it is not a real challenge, right? And function of money is unit of account. Like in the barter system, you were exchanging goods, and here also you exchange it for a value, and then you should also be able to pay without having an intermediary all the time, right? So these are some functions of money. Very basics. I don't want to go into the details. All of us use money, so let's kind of go into the next topic, which is how money is created. Probably this is also something which most of us know. Money is got into the economy in two forms. One, the central bank produces cash, right? I mean, they mint coins, print currency, and the claim here is on the central bank. In our case, Indian context is the Reserve Bank of India. And then the second way of money creation is the commercial banks, right? Central bank extends money to the commercial banks, and the commercial banks in turn extends money to the consumers, businesses, persons as loans, right? And here the claim is on the commercial bank, which is the intermediary, right? And if I go to the next slide, which kind of shows this a bit more on how the cash flow in the ecosystem would look like, right? So central bank is printing cash, goes into the economy, you'd be able to withdraw money from your bank and use it, use the cash, use the coins as much as you can. And then the commercial banks issue credit cards, loans, and then that goes also back into the economy, right? Today, 97% of the money created is through the commercial banks, that is in form of extending loans. Again, that comes from the central bank because commercial banks are only intermediaries in this case, right? And then government also uses stimulus whenever there is a spending deficit. For example, during the COVID pandemic, when the economy was stuck, when the spending was not enough, they kind of gotten money in form of stimulus, trying to subsidize businesses, bring in tax benefits and tax reductions, rebates, and so on, right? So all this, again, goes into the economy, into the ecosystem, right? And some of the money goes back to the central bank through the government as taxes. And again, some of the money goes back to commercial bank in form of loan repayments, which would be both the interest and principal. And this is a cycle, right? This ecosystem keeps the economy up and running. So the main takeaway from this particular topic is money is created in two different ways. Central bank prints currencies, mints coins, commercial banks lends or loans money from the central bank and lends it again to consumers and businesses. And then it comes back into the central bank as loan repayments, and the commercial bank would again go, send it back to the central banks as interest repayment, right? So this is how money is created, and 97% is through the commercial banks in form of extending loan and credit. This is a bit more detailed illustration of how cash is distributed. I'm not going into this benefit of time. So we kind of spoke about money being generated and how it is distributed, but we also have to remember not all money are the same. There are very different and distinct characteristics of money. Okay, what is money and what is not money? This particular picture gives you a very clear idea. Central bank money, the liability is on the central bank. This is money in your hand, certainly money. Commercial bank money is also, the liability is from the commercial bank, but it is also guaranteed by the central bank. So the money is in your bank account. This is also a money, right? And then there are some fintechs and bigtechs which kind of more operate as a channel, again through the commercial bank, like PayPal, Paytm, Oyster, and so on. This is also money. The claim is private, but it is still regulated by law. So we don't have a problem. This is all money. What is not money is cryptocurrencies, Bitcoins, you call it stable currencies, which has a value, which really doesn't have a good way of valuation, right? So this is not money. Again, there is a lot of controversies about cryptocurrencies. So we're not going into the topic today, but just to ensure that we all understand what is money, what is not, right? Central bank money is money. The currencies and coins you have in your wallet is money. The deposits you have in your bank account is money. But cryptocurrencies like Bitcoin, Libra, stable coins, those are not money, right? So it's very volatile in nature. The claim is on some company, private company, which is not regulated in most countries and geographies. So if we go into the next topic, this is where you can understand how the money is categorized. And there are four main triads. One is the accessibility. What is it? Is it like digital, physical? And then it is also about how portable it is, and so on. So I'll not go into the details of this one. I just have trouble. Yeah, details of this one. But let's kind of talk about some important pointers highlighted in red, which we will use in the rest of the presentation. Okay, point number one: cash. Be that paper or metal, which is coins, is kind of placed really well. It's widely acceptable. Okay, it's not digital in nature, but you can store it somewhere. It's issued by the central bank. It can be used for all exchanges, peer-to-peer, business to business, business to consumer, consumer to business, and so on. Very well placed, right? And then something that we can trust on. Then we have the CBDCs, which is again issued by the central bank, which is also placed really well, even scores one more point because it can be digital in nature. So it is accessible widely, at least in markets where it's popular. It can be stored digitally, issued by the central bank, regulated by the central bank, and claim is on the central bank. It can be made in all combinations: peer-to-peer, business to business, business to consumer, and consumer to business, right? And there is also different type of CBDCs. One is value-based and another one is account-based. If you look at point number 6, privately issued cryptocurrencies, for example, Bitcoin, it's placed somewhere in the bottom. Again, okay, it's digital in nature. It's not issued by the central bank, but it can still be used and exchanged in all kind of combination: peer-to-peer, business to consumer, consumer to business, and business to business. Because today in some markets, some famous stable coins are widely accepted. But okay, I have to be very careful in saying widely accepted. It's accepted only in some geography where it is regulated, right? If you say it's accessible, it's not accessible because it's not a global in nature, right? I mean, for example, if you have a euro or e-rupee, it can still be exchanged anywhere. When the cross-border CBDC opens up, you can still do that, but you can't do the same with Bitcoins and the rest of the stable coins, right? So that's where it's placed low. And if you take, for example, precious metals like gold, again, we're coming to that because we discussed it is also a form of money enabling trade. It's placed okay. It's kind of widely accessible. It's used in all kind of exchanges: peer-to-peer, business to consumer, consumer to business, but it is not issued by the central bank, nor digital in nature. Okay, that is debatable. There are also some kind of digital gold that you can buy in some part of the world today. Yeah. And then there are also some prepaid cards, more like store-issued gift cards, which are today widely used. But then, it's not accessible widely, and then the claim is not on an authority which you can trust on. So this is available on the internet. You can go search for the money flower, and there are more details. You can also go into the details. Benefit of time, I'm not going into the details of this. Yeah. If we can then quickly take another poll before we go into our important topic. Richa, if you can launch the second poll, please. Okay, interesting question. How did you pay the last time when you were doing an in-store shopping or paying for a restaurant after dining? Give it another 10 seconds. Okay, great. So 56% of the participants say that they've paid through super app. It could be Paytm, PayPal, GPay, if you're in the Europe, likes of Vips, Swish, Mobile Pay, etc. 17% of the participants say that they've paid through debit card, 33% through credit card, and 10% through cash. This is true also from the many surveys that has happened around the world. Buying behavior of consumers have changed, right? And it could be because of multiple reasons, because of the rewards you get, when you pay through a super app, the convenience that you have. You don't have to carry your plastic card in your wallet all the time. But also the most important factor is the cost of transaction, both for the businesses, the merchants, and for the consumers and customers which are buying, right? So a study from Accenture Global Consumer Survey says about 31% of the consumers which were paying through their credit cards have shifted through other means the last couple of years. This is primarily driven by the inflation, the cost associated with interchange fees, and also when the merchants and businesses have to lower their margins because of the interchange fee when it is tied to the card transaction, they also encourage payment through alternate rails. So there's a very, very rapid shift of people moving away from credit cards to alternate methods, where super app takes the lead in certain geography. I'll come to that in the later part of this thing, but it's primarily debit cards. Buy now, pay later is also a very, very popular means in most markets today. There are companies which have tie-up with manufacturers and offer zero interest loan when you buy an appliance. So it's very popular in India, and it is also popular in Europe with very, very low interest rates. So buy now, pay later is also a very popular way of payment, especially from those which have switched from the card payment or the credit card payment. Interestingly, 69% of people which were paying through credit card chose to pay through the card because of multiple reasons. But the trend is very clear. In many markets, including India, most of the Asian countries, people are moving away from credit cards. That's primarily driven by merchants and the businesses which are encouraging alternate payment methods. And it is also true that Asia Pacific shows the highest usage of digital wallets and super apps. In India, we are fond of Paytms and Google Pays and so on. Yeah. In this picture, we're also able to see how Bigtechs and Fintechs are taking the lead in digital payment, creating an alternative rail to the traditional payment system, like cash, credit cards, debit cards, or even check payments. This is again only limited to the retail payment, which accounts, for a big chunk of the payments that we're talking about. As you see, in India, 71% of Indians pay through Google Pay. I admit I also do that. And Amazon Pay is getting popular, PayPal 30%. From my experience, that mostly when you have to make a cross-border payment, which is very complicated in India for multiple reasons, right? If you look at the UK, PayPal again leading the way with 46%. Apple Pay 17%, Google Pay 10%. Sweden, Swish 51% as the market share. Klarna is again a fintech which is kind of gaining the share over the years. In US, PayPal leads the way, but we should also admit US is still not modernized. They still use a lot of check payments, and wire transfers takes days before it can be credited. Mexico, again, there are new payment rails. The survey is not updated with the most latest one, but PayPal is leading with 51%, and then followed by Mercado with 22%. China, WeChat Pay 82%, Alipay 79%. This is a very interesting thing, is because people use different channel for different ways of payment. That's why you see you don't tally to 100%. WeChat Pay is 82%, and Alipay is 79%. So the message from this is this is a shift from the traditional way of making payments to alternate payment rails. And again, the fintechs are leading the way. If we then talk about the cash usage in retail, Norwegians pay the least with cash. Only 3% of the payments made in Norway is through cash, followed by Finland, which is at 6%, Sweden at 9%, Denmark at 12%. Nordics is by far the best with cashless societies. And you see, cash is still king in India, with 50% of the trade or retail trade still conducted through cash. Again, for multiple reasons, but we are seeing a very, very rapid shift through alternate payment methods, the likes of Paytm, Google Pay, Amazon Pay, and so on. This is growing at a rapid pace. And the study says by 2028, India would have about 85% of transactions not made through cash. We would still have the highest usage of cash in economies that is of our size and the population which can be comparable. But the next 5 years, we will see a very, very big shift in the way how we pay in India. Before I go into the next topic, world of payments. Okay, we have now seen how we paid in the past, how money is created, how money is distributed, and the shift in how we pay. We also want to go into the details of what happens behind all the payments that we are making every day, right, day in and day out. A person that I know for a long time once said, everything in life depends on payments. And I realized how true that statement is, right? I mean, today you have to pay everywhere for everything. At least in the Indian context, you need to pay for everything, right? And payment has become a very, very crucial part of our economy, our lives. Also, if I have to put it that way. So the next few slides, approximately 7 to 10 minutes, we'll talk about, how the payment market is today and how it is changing and what are the clear challenges that we face along the way. Again, this is more for the audience which are keenly following the payment industries, for people from the bank, for people from fintech. So when I was trying to create this slide, looking at some references, you see about the payment industry is about $2 trillion. The revenue is $2 trillion annually, which kind of accounts to about 39% of the banking revenue. And in the world of payments, you have multiple personas and multiple participants, the central bank, the commercial banks, fintechs, PSPs, merchants, corporates, consumers, and the regulating or the regulatory authorities, right? And we see that the market growth is at also a very rapid phase, 5 to 7% in 2018 to 2025. And in certain economies, this is growing even faster. And if we make it easy for all of us to understand, there are two main domains: commercial, which accounts to $1 trillion, the retail, which holds up to $1 trillion. Again, very, very much equal. Asia Pacific leads the market with 45% of this market share. Clearly, 20 to 50% of the transaction growth is from the emerging markets, mostly from Asia Pacific. There are different payment rails, different payments that we do day in and day out: domestic payment, cross-border payment, payment through cards, and wallet. And if you look at the payment authorization time, if you look at the cross-border payment, which is the most complex today, it takes about 5 days before it can reflect in your creditors account. A lot of fintechs are leading the way in innovation, making real-time cross-border transactions possible. Of course, it's for a very less fee. A lot of innovation is happening there. Domestic payment, especially the batch, takes about 1 to 3 days. In India, domestic payment is also almost instant. In the SEPA region, it is still not real time, but it can be within a day. And in some countries like the UK and US, it can be more than a day. And you can also choose the speed of your credit, and then there is a cost associated with it, right? Instant payment, less than 10 seconds. Card payment, even lesser, probably 3 seconds. This is the time it takes for the transaction to happen. If we go a bit deep into the bifurcation, like I said, there are two main domains: retail payments and commercial payments, and then 5 subdomains which share almost the same characteristics, right? In the retail payments, we have peer-to-peer. Okay, I pay to a friend of mine can pay to me. It could be through a wallet, the bank account. It could be through check, multiple ways. Consumer to merchant payment, or consumer to business. Again, it could be a lot of players, could be issuer, acquirer, and you have the issuing bank, acquiring bank, a lot of players in the transaction. Consumer to merchant, if you don't use a card, then you can do it through the UPI. You go through a PSP, and then there is a payer bank, there is a central bank or intermediary bank, and then there's a pay bank. Commercial payment, business to business, is mostly to the traditional banking system, RTGS, NEFT, credit transfers, and so on. Again, you have an intermediary there, which is the central bank. And there's also consumer to business happening through via PSPs, like, for example, UPI in India, VIPS in Norway, Swish in Sweden. A lot of not just consumer to business, but also business to business transactions happen through the PSPs, and not the traditional way of account to account payment. In all, the most important points to be taken care of is costs of the transaction, how quick the transaction could be, and if we are within compliance. Very complex, but we see that it is being simplified over time. Again, I'm going through benefit of time. There are also fundamental elements which is shaping the transformation in the world of payments. For example, the last 3-4 years, we have seen a great shift from high value payment to high volume payment, from RTGS to IMPS in the Indian context, right? So back in the days, payment was slow. It was taking days before the credit could happen. Reconciliation was a challenge, but today, real-time straight-through processing has made a lot of difference, for the bankers, also for the consumers, which can have almost instant credit. And also, the cost of transaction is playing a major role in how people choose payments. Banks are really working hard to ensure that the cost per transaction is less, because India context is very different from rest of the world. In India, you don't pay a fee to have a bank account. Of course, there is some minimum balance requirements, but then there is not a fixed fee that we have to pay to the bank for you to hold the account, because the way banking works is they earn through interest, right? But this is not the same, in, for example, the Europe, right, where the interest was almost negative, but now it's increasing because of inflation and many reasons. But in Europe, you need there is a charge for you to hold a bank account. There is a charge for you to make a transaction, right? So we also see banks working on to reduce the cost per transaction, cost per account, and so on, so that they're able to compete with the challenger banks, with the fintechs which are disrupting the market. Technology modernization is also a major element which is shaping the transformation today. A lot of banks still work on mainframe, right? And then a legacy to modern cloud native transformation is not an easy thing. It doesn't happen overnight. It takes years before you can complete, and even more to realize the benefit of your investment, right? So, and also the last thing which is impacting is the regulation. Banking is a very complexly regulated environment or ecosystem. It depends on geographies, it depends on countries. It also depends on the agreement countries have between each other. So a lot of regulation, licensing, transaction, screening that comes into play, which also adds on to the complexity. But we see the transformation happening in all these areas with a lot of innovation coming in through regulation. Technology is making implementing regulation very easy today. Example, the ISO 20022 adoption across the world, right? That's going to have a lot of benefit, but banks are on an average spending 4 to 6 years for the implementation, and then even more to get the investment coming back to them in terms of benefits. Yeah. So again, a lot of elements which is kind of driving transformation in the world of payment. And then there are also impact because of multiple factors, like the regulation, competition because of the emerging fintechs and challenger banks, and also the real-time interportability is a challenge, because there are some countries which are bringing law to enable interportability of your not just accounts, but also wallets, right? I mean, which is adding on to the to-do thing for a bank. And as you see, ISO time to impact is almost immediate. It should have happened yesterday, but there have been multiple delays because of the readiness. And then, there are also things like, in a way, some economies or some group of countries that are trying to build their own payment clearing system, like the P27 in Nordics, which is also taking a lot of time. And again, when it happens, it's going to be super good, because they don't have to be dependent on a much larger economy. They don't have to be tied into EBA so much, but it takes a lot of time and investment for a bank to realize the benefit of that. Good. Then I'm also rushing because we have to probably conclude this in another 5-6 minutes so that there is enough time for questions. I'll quickly go into the central bank digital currencies and focus on India. So a role of a central bank in the digital currency transformation, right? I mean, it has to ensure stable prices. So cryptocurrencies like Bitcoin or any of them doesn't have stability. That's the main challenge, right? It's not regulated in multiple countries. So CBDC is a good alternative for cryptocurrencies because it is guaranteed by the central bank, right? And then you have to ensure safe and efficient way of payment. You have to ensure financial stability. This is the role of a central bank. I'm not going into the details, but central bank clearly want to create alternative to cash, right? This could be, there could be multiple reasons for different economies to do. In India, for example, we still use 50% as cash, right? And then you see the cost of printing currencies and minting coins is very high. A matter of fact that we still import the paper and ink needed to print our own money. Of course, we have kind of brought down the dependency in making our own, but still the cost of printing the money and distributing the money is still too high and has a lot of risk, right? So this is a reason for India to launch CBDC. But for rest of the world, for some countries, they see that cash usage is falling, right? And that's because, they've become a cashless economy, but they also want to still have cash in the economy in the form of digital cash, right? So some countries in the Europe have a different reason to bring in central bank digital currencies. And some countries are, threatened by unregulated cryptocurrencies, and they're forced to bring in digital currencies that can be stable and they don't pave way for a parallel economy by cryptocurrencies. So if we quickly look at the status of CBDCs around the world, a lot of countries are pursuing CBDCs. Some are in the research phase, some are in the proof of concept, and some even launched. India, China, US, we're already in the pilot phase. And I will also show a kind of a timeline on how it looks like. eCorona pilot started in 2019. We from Tietoevry Banking were also part of the eCorona pilot, and I'll talk a bit about that. US started the digital dollar in 2021, but it's moving at a snail pace. Understandably, their focus is on modernizing the traditional payment rails. Digital euro, they have started the work in 2021, a lot of traction the last few months. India, it was expected that we will start the pilot in 2023. When I did the last keynote in NASSCOM, I also said it's 2023, but as always, RBI and the authorities surprise us. So we've already launched the pilot of digital currencies, both retail and wholesale. And if you look at the India context, wholesale CBDC was launched in November. It's still a pilot and closed user group. There are about 9 banks participating. Primary use cases, they're wanting to settle between the secondary market transactions so that the cost of settlement is quite low. You don't need to maintain liquidity. You don't need to have an authority to monitor that. So use case for now is settlement of secondary market transactions, right? And the future scope would be cross-border transactions and bank-to-bank wholesale settlement. Retail CBDC was launched 1st of December, again, pilot, closed user group, 4 banks participating and 5 more joining now in a week's time. SBI, ICICI, S Bank and IDFC. A lot of I was not the lucky one to be invited to be part of the pilot, but a lot of my friends and colleagues had the possibility to actually download the wallet and buy digital currency and store it in the wallet. Of course, in Pune, they still not have merchants accepting digital currencies, but a lot of other cities do have. So this is token based and works on QR. I'm rushing so that we have a lot of time for questions. So if you look at the high-level architecture of how CBDC would look like, especially for India, the Reserve Bank has not been very open in sharing the architecture of the designed e-rupee, but we assume, based on their white papers and a lot of discussions, that it's going to be like this, where you have the commercial banks buying or the central bank issues CBDC to commercial banks, and the commercial banks in turn will distribute it to the consumers. The consumer may have to open an account or simply have a wallet where you can buy and store your digital currency, but the transaction still happens through a bank account linked to the wallet. Right. There can also be wallets which is not necessarily linked to a bank account, but it is just used for trading purpose. For example, a merchant doesn't have to necessarily link the wallet to his bank account, but it can be more like a transactional account. He can accept payments through the wallet and also make payments to businesses through the same wallet. Yeah. So this is again an example based on experience because India Reserve Bank has not really published the architecture. Again, the extended or future scope is it will not just be the commercial banks. It could also be the fintechs, PSPs, and governments, which will then be able to issue digital currencies. It could be for multiple reasons, like paying out subsidies. PSPs like Paytm, PhonePe, Google Pay also have the capability to enable wallets for digital currencies. I'm not going into the details, benefit of time. Let's take a quick poll in here. Richa, if you can take this poll. This is basically to understand what your belief is. Do you think CBDC would be a good alternative to cash, especially in the Indian context? Okay, please close the poll and look at how it looks like. Oh, okay, 67% believe that it is going to be good, 10% no, and 23% can't say or don't have opinion. Thank you. It will be very interesting to see the use cases of digital currencies in India because the demography is very different, and we've always seen adoption of any new technology in banking has been very fast, and it grows into wider propositions very, very quickly. Again, I will not go into the details. Some pictures of how digital currency looks in other parts of the world. But also these are, at a conceptual level. In China, they're trying multiple ways, and in India, for now, it's a QR code through the wallet. In Tietoevry, we did some very extensive work with central banks. We also have our own sandbox can be made available for central banks and commercial banks to test CBDC if they want to go ahead and implement CBDC in their country. Okay. And I want to also close this conclude this webinar by showing the future vision for the future monetary system, which was also the topic, but we kind of went into multiple topics, right? Central banks around the world are working hard to published the vision for the next 5 years, how they want the monetary system to shape their economy. Safety, stability leads the way. This is the fundamental building blocks of any monetary system. Efficiency, it has to be fast, it has to be low cost. Inclusion, banking the unbanked, bring everyone into the banking system. We did a great job in India with the Jan Dhan accounts. Most of our citizens are into the banking system today. Okay, they use it, they don't use it, that's a different question. But at least we pave the way for everyone to come into the banking system. Accountability, it's about the regulation and bringing in transparency. Integrity, avoid fraud, ensure that we don't allow illicit activity. Adaptability, made for the future. Architecture like UPI is made for the next 20 years. Right? That's exactly the rest of the world is also doing with the new payment architecture in the UK, new payment platform in Australia, and the new payment platform also in Canada called Links. Openness and user control over data, privacy, and laws to ensure that the privacy is protected is also an important element of the future monetary system. I'm not going into the details. Again, just 30 seconds so that I conclude. When I started my career, I was told that this is one of the busiest years for the payment market. But I've seen all 18 years the same, right? And 2023 is certainly going to be the year of payments. With India moving from pilot to commercial launch of ERP, instant payment launch in the US with FedNav in June 2023, P27 in Sweden, SEPA request to pay adoption picking up, ISO migrations around the corner and going live, the real-time rails in Canada, and many more. So certainly a year of payment, 2023, it's going to be very busy for the banks, for fintechs, for companies like us. I would want to pause here and open up for questions.
Yes, so we do have a couple of questions coming in, Sathish. I'll just go with the first one. How CBDC will be beneficial to the end user, or it's just minimizing the operations of institute like bank?
I think this is a very good question. CBDCs, like I said, it's launched in different parts of the world for different reasons. But if I kind of stick to this particular question, for an end user, it's like where you have to carry cash. You don't have to carry cash. You can just still pay with your phone, right? And you can some can also argue that, okay, we are able to do that also with UPI today. But UPI and digital currencies are not the same. With UPI, someone should have a bank account to accept payment, but it's not the case with CBDC, right? I mean, in UPI, there is an intermediary bank which kind of, acts as a broker between the payer and the receiver, right? But in CBDC, there is no intermediary. It's just a wallet, and you can just pay to a wallet. Could be a Kirana store or a vegetable vendor on the road, which doesn't have a bank account. It just has to have a digital currency wallet, and you can still enable a payment. As simple as paying, physical money from your wallet.
All right, thanks. The next question. What investments would banks have to make in technology and products for CBDCs?
Very good question, Siddharth. Thanks. From our experience, especially working with the banks in Europe, we have seen that the banks were initially very reluctant in opening up doors for CBDC. It is the central bank which had to really make a push. And from our experience working with the Central Bank of Sweden, they're making the architecture very easy so that you don't have to make extensive investments to kind of, accept digital currencies from the central bank and distribute it. It could be as simple as having a ledger account. So that's exactly what is happening in India as well. They're using the base of UPI, they're using the foundation of a banking system, and they're just making a ledger account, which can be used to load money and to transit digital money. So We don't think it would be as extensive as implementing a new payment system. For example, P27 in the Nordics, right? It's very negligible when you compare to the investments you make with a new scheme.
Okay. The next one. How will CBDC wallets and UPIs coexist?
This is also a good question. And this will coexist for a long time. Like I said, the use cases for CBDC are very different today, right? I mean, if a person doesn't want a bank account, for multiple reasons, right? I mean, it could be privacy, it could be because he doesn't have the right documentation, literacy to be able to go into a bank and open a bank account. They may have a CBDC wallet. I think as long as cash and UPI coexist, CBDC and UPI will also coexist. It is just an alternative for cash and not alternative for UPI.
Right. Thank you, Sathish. We'll take another 1 or 2 questions more. Can you elaborate on ISO migration in 2023?
Good question. I see that this is mostly the Europe, which has a hard deadline to meet, with target to putting the deadline for ISO compliance by 4 times already. Now the new deadline is before summer, the European summer. Hopefully, target 2 migration will be done, and also cross-border will be fully ISO compliant, not during the next year, but it's going to take a couple of more years. But a lot of work would happen during next year. In India, most of our teams are already ISO compliant, but we also have our proprietary tag format based schemes, I think, which will continue, and it cannot be sunset over the time.
All right, thanks, Sathish. Another one. How do commercial banks make money in the CBDC system, as the CBDC wallet is under control of RBI directly?
Yes, also a very good question. There are also different use cases, that is being discussed today. So there are also some central banks which are looking at, can you make CBDCs as interest bearing? For example, if you have a CBDC in your wallet, it can also earn you interest, right? But again, these are all at a very conceptual level. None of the central banks have decided that CBDCs could be interest bearing. Of course, there could be also new business models that could arise out of it. If you take UPI for an example, there are multiple business models, on a UPI transaction. Of course, banks or fintechs don't charge a fee for UPI transaction, but they play with the data, right? They cannot monetize the data that they manage, because of the transaction. I think CBDC would also follow the same route. There's no direct answer. One could be interest-bearing accounts, another could be monetizing the data, like, for example, the UPI.
All right. Thank you. Thank you so much, Sathish. And thank you, everyone. We are sure it was an informative and insightful session for everyone. It really was interesting for me, at least. Once again, thank you, Sathish, and thank you, everyone, for attending. Please do help us with the feedback post this webinar. And in the interest of time, we couldn't answer a couple of questions, but you can please drop an email to pune@nasscom.in, and we will get these questions answered as soon as possible. Thank you, everyone.
Thank you so much. It was a pleasure being here. Thank you.
Thank you. Thank you, Sathish.